We check in now on the latest cattle market news with our market update, brought to you by CattleFax.
Hello, I'm Marcus Brix with the CattleFax update. On January 8th, the cattle feeding industry experienced something rare, a Monday cash-fed cattle trade. Negotiated cash trade, where the feedlot directly negotiates a price with the meat packer's buyer, often takes place late week. In bear market of 2015, cash trade was nearly always on Friday in the late afternoon, and negotiated volumes as a percent of slaughter were historically low. Implementation of the Fed cattle exchange auction has greatly increased the number of weeks with trade beginning Wednesday. Since the auction began in September 2016, trade has occurred 38% of the time on Wednesdays and 31% of the time on Fridays. In the past 68 weeks, only 2 weeks have seen trade start as early as Tuesday, but getting trade started before noon on a Monday is unheard of in recent history. Cash-fed cattle traded at mostly $120 per hundredweight, which is down $1 to $2 from last week. Cattle feeders were willing sellers at that level after prices dropped limit down on Friday and were roughly $2 lower by 9:30 a.m. Monday. From January 3rd to the 8th, spot live cattle futures prices fell $6.50 per hundredweight, but cash cattle prices have only declined about $3. This means the basis, a measure of the difference between cash and futures price, is continuing to strengthen. Feedlot risk managers that choose to hedge fed cattle through selling futures figure an expected basis into their break-even estimates. If a cattle feeder is penciling in a historically average basis and their actual basis is higher, that results in a more profitable outcome. Use today as an example. If cash prices are going down, the risk manager loses value on their physical inventory, but is making money as futures prices decline. They're making money in the futures market by being short because they have a sell position at a price higher than the current market. If futures prices decline by a larger amount than the cash does, then the cattle feeder is profiting from their hedge position. A strengthening basis is a nice boost for the cattle feeder's bottom line, and the basis has been improving since September. The 2017 April live cattle futures basis grew stronger from October to March, with cash reaching as wide as an 8% premium. It is unknown whether or not the 2018 April basis will reach these levels this spring. Today the April basis is at par with the futures, but cash would only need to advance another 2% premium over the board to match both recent April basis highs as well as the average of the previous strong April basis years. For the Angus Report and CattleFax, I'm Marcus Brix.
To learn more about CattleFax, your leading source for beef industry market information, visit CattleFax.com.